Hello again, and welcome back to Simplified Whispers. We're diving into the second half of Mastering the Mental Game of Trading by Stephen Goldstein. This time, we're tackling the production and performance phases of the performance process cycle, and wrapping it all up with the crucial letting go phase. Get comfortable because this is where the heart of trading success truly comes to life. Part 3. The Performance Process Cycle, Quadrant 2, Chapter 16. The production phase. The production phase is where preparation meets strategy. Goldstein emphasizes that successful trading doesn't start with execution. It starts with methodical groundwork. This phase involves gathering data, analyzing it, and crafting a detailed plan for each trade. Market analysis. Focus on relevant and actionable information instead of getting overwhelmed by excessive data. Traders often mistake volume of information for quality, leading to analysis paralysis. Trade planning. Define clear entry and exit points. Establish stop-loss levels and account for various market scenarios. This reduces emotional interference during trading. Scenario mapping. Visualize potential outcomes for each trade to mentally prepare for what the market might do. Key insight. The quality of your production phase determines your ability to execute trades with clarity and confidence. Poor preparation leads to hesitation, doubt, and reactive decision-making. Actionable tip. Create a pre-trading checklist. Ensure each trade aligns with your strategy, has a defined risk-reward ratio, and considers market conditions. Chapter 17. Preparing to make an educated guess. Goldstein reframes trading as a series of educated guesses rather than precise predictions. The goal isn't to eliminate uncertainty, but to manage it effectively through preparation and probability-based thinking. Accept uncertainty. Even with meticulous preparation, no trade is guaranteed. Accepting this reduces the emotional burden of trading outcomes. Strategic risk management. Treat each trade as a calculated bet, understanding the risks and potential rewards. Avoid perfectionism. Striving for absolute certainty can lead to overanalysis and missed opportunities. Instead, focus on making informed decisions. Example: a trader who insists on perfect timing might wait too long and miss a profitable setup. By contrast, an educated guess rooted in preparation allows you to act decisively. Pro tip: journal your trade setups and outcomes to refine your ability to make educated guesses over time. Chapter 18. The map is not the terrain. Goldstein introduces the idea that theoretical analysis often diverges from real-world conditions. While analysis provides a roadmap, the actual market is dynamic and unpredictable. Dynamic adaptability. Be prepared to adjust your plan in response to new information or unexpected market behavior. Rigid adherence to a predefined strategy can lead to losses. Practical awareness. Recognize that models and strategies are simplifications of reality. They're tools, not guarantees. Learning from deviations. Use instances where the market behaves unexpectedly as learning opportunities to improve future plans. Key takeaway. The market doesn't follow your map. It charts its own course. Successful traders respect the map but respond to the terrain. Actionable tip. Keep a flexibility log to document instances where you adjusted your plan and analyze whether those decisions improved outcomes. Chapter 19. Our natural limitations. Goldstein explores the inherent psychological and emotional limitations that influence trading decisions. Recognizing these limitations is the first step toward overcoming them. Cognitive biases. Common biases, like loss aversion, overconfidence, and confirmation bias, can cloud judgment. For example, traders may hold on to losing positions longer than they should because they fear realizing a loss. Emotional triggers. Emotions like fear, greed, and frustration often lead to impulsive decisions. Goldstein emphasizes the importance of emotional regulation to maintain clarity. Overcoming limitations. Develop habits that counteract these tendencies, such as predefining exit strategies and using objective data to guide decisions. Example: a trader who becomes overly confident after a winning streak might take on unnecessary risk, leading to significant losses. Actionable tip: conduct a bias audit by reviewing past trades to identify patterns influenced by cognitive biases. Awareness helps mitigate their impact. Chapter 20. Mental capital, time of day, and decision-making. Mental capital refers to your psychological resources, such as focus, clarity, and emotional resilience. Goldstein explains that mental capital, like physical energy, is finite and must be managed carefully. Time. Sensitivity. Identify the times of day when you're most focused and make high-stakes decisions during these periods. Avoid trading when you're tired or distracted. Energy management. Overtrading or trading during periods of mental fatigue depletes your resources and increases the likelihood of mistakes. Building resilience. Regular breaks, mindfulness exercises, and physical activity can help recharge your mental capital. Example: a trader who trades continuously without breaks may experience decision fatigue, leading to impulsive trades. Actionable tip: schedule focus blocks for trading and recovery blocks for relaxation to maintain mental sharpness throughout the day. Chapter 21: Intuition and Trading. Goldstein demystifies intuition, explaining that it's not guesswork, but the result of subconscious pattern recognition. Intuition develops through experience and a deep understanding of market behavior. How intuition works. Your brain processes past experiences and market patterns to make quick, informed decisions. The more you trade and reflect, the sharper your intuition becomes. Balancing instinct and analysis. While intuition can guide decisions, it should be validated with data to ensure objectivity. Developing intuition. Reflect on past trades, analyze patterns, and immerse yourself in market data to train your subconscious. Example: an experienced trader might sense an impending market shift before clear signals appear. This gut feeling is intuition honed through years of observation. Pro tip: keep an intuition journal to record instances where your gut instinct influenced a decision. Over time, analyze the accuracy of these instincts. Chapter 22: Learning to trust your intuition. Building on the previous chapter, Goldstein emphasizes that intuition becomes a powerful tool when paired with discipline and self-awareness. However, trusting your intuition requires overcoming self-doubt and fear. Confidence through practice. The more you rely on and validate your intuition, the more confident you'll become in its accuracy. Avoiding emotional decisions. Intuition should never be confused with emotional reactions. Distinguishing the two is crucial for making sound decisions. Reflective learning. Review trades where you relied on intuition and assess the outcomes. This reflection helps refine your instincts and build trust in them. Key takeaway: trusting your intuition doesn't mean ignoring data. It means integrating your instincts with logical analysis. Actionable tip: before acting on intuition, pause and ask yourself, is this a calm, informed instinct or an emotional impulse? Part 4. The Performance Process Cycle. Quadrant 3. Chapter 23. Meet Radical Uncertainty. Goldstein introduces the concept of radical uncertainty. This is the recognition that markets are inherently unpredictable, and no amount of preparation can eliminate all risk. The goal isn't to control the uncertainty but to adapt to it and use it to your advantage. Goldstein explains that traders often waste energy trying to predict every market movement. Instead, he suggests embracing uncertainty as a natural part of trading. This mindset shift helps traders avoid frustration and anxiety when the unexpected happens. Key takeaway: radical uncertainty isn't a problem to solve, but a reality to accept. The sooner you adapt to this mindset, the better equipped you'll be to handle unexpected market movements. Example: imagine navigating a foggy road. You can't see what's ahead, but you trust your skills and tools to guide you safely. Similarly, in trading, you rely on your preparation and adaptability to navigate uncertainty. Actionable tip: shift your focus from predicting outcomes to managing your response to market changes. Develop flexible strategies that allow you to pivot when needed. Chapter 24. The Performance Phase. This chapter focuses on the execution of trades, the point where preparation meets action. Goldstein emphasizes that execution is not just about following a plan, but about performing under pressure. Core principles of execution. Clarity. Ensure your trading plan is clear and straightforward, leaving no room for doubt. Emotional control. Stay calm and composed, even when the market becomes volatile. Adaptability. Be willing to adjust your approach based on new information. Goldstein provides practical exercises to improve execution skills, such as visualization techniques and mental rehearsal. By imagining yourself executing trades flawlessly, you build confidence and reduce hesitation during actual trading. Pro tip: before entering a trade, pause and ask yourself, am I reacting emotionally or am I following my plan? This simple question can prevent impulsive decisions. Chapter 25. Win or lose. Everybody gets what they want, out of the market. This intriguing chapter explores the psychological dynamics of trading outcomes. Goldstein argues that traders unconsciously create scenarios that align with their beliefs, even if those outcomes are detrimental. For example, a trader who believes they are unlucky might subconsciously sabotage their trades to validate that belief. Similarly, someone who seeks excitement may take unnecessary risks, prioritizing the thrill over profitability. Key insight: self-awareness is critical. By understanding your underlying motivations and beliefs, you can identify patterns that may be holding you back. Actionable tip: reflect on your recent trades and ask yourself, what does this outcome say about my mindset? Use this awareness to challenge limiting beliefs and adopt healthier perspectives. Chapter 26. The Performance Effect. Goldstein introduces the performance effect, which describes how your mental and emotional state impacts your trading results. Positive energy and focus often lead to better decisions, while stress and negativity can spiral into poor performance. He emphasizes the importance of managing mental capital, which is your capacity to make clear, rational decisions. Just like physical energy, mental capital can be depleted by stress, fatigue, or overtrading. Actionable tip: start each trading day with a mental warm-up. This could include mindfulness exercises, journaling, or setting specific goals for the session. Chapter 27. Results. Orientation versus process orientation. In this chapter, Goldstein highlights the dangers of being overly focused on results. While profits are important, obsessing over them can lead to emotional decision-making and burnout. Instead, traders should prioritize the process, the consistent execution of their strategy. Key takeaway: trusting your process allows you to stay disciplined, even when short-term results are disappointing. Over time, a strong process leads to consistent success. Example: imagine a basketball player who focuses solely on scoring points. They might ignore their team's strategy, leading to a loss. Similarly, traders who prioritize results over process risk sabotaging their own performance. Actionable tip: after each trade, evaluate your adherence to your process rather than the outcome. Ask yourself, did I follow my plan? This builds confidence in your strategy. Chapter 28. Navigating the Performance Phase. This chapter provides a roadmap for thriving in the performance phase. Goldstein emphasizes the importance of staying present and focused, even when the market is unpredictable. Key strategies: break down trades. Focus on executing one trade at a time rather than worrying about the bigger picture. Reflect and learn. After each trade, identify what went well and what could be improved. Use this feedback to refine your approach. Pro tip: develop a checklist for executing trades. This reduces the risk of emotional interference and ensures consistency. Chapter 29. Staying positive. When the market wants you to be negative, the market can be unforgiving, and it's easy to let negativity take over. Goldstein offers practical advice for maintaining a positive mindset, even during tough trading periods. Key techniques. Gratitude journaling. At the end of each day, write down 3 things you're grateful for in your trading journey. This helps shift your focus from losses to learning. Reframing losses. View setbacks as opportunities to grow rather than failures. Actionable tip: surround yourself with a supportive community of traders who encourage and motivate you. Sharing experiences and challenges can help you stay optimistic. Chapter 30. Letting go. A superpower. Goldstein elevates the concept of letting go by likening it to a superpower. He emphasizes that holding on to past trades, whether they were victories or failures, can distort future decision-making. By letting go, traders open up mental space to think clearly and seize new opportunities. He explains how the inability to let go often stems from attachment to outcomes or ego-driven validation. Traders who obsess over their last big win or loss are more prone to emotional decisions, which can undermine their long-term success. Example: imagine a tightrope walker who constantly looks back at their steps instead of focusing on the rope ahead. Similarly, a trader distracted by the past risks falling. Actionable tips: develop a mantra like, "The past is a lesson, not a burden." Incorporate visualization techniques to mentally release the hold of a previous trade. Chapter 31. Letting go. Goldstein dives deeper into actionable strategies for mastering the art of letting go. He suggests that letting go isn't an overnight skill, but a habit to cultivate through consistent practice. Strategies for letting go. Self-reflection, journaling after every trade to unpack emotions and understand triggers. Mindful detachment, observing emotions without judgment and letting them pass. Physical anchors, using actions like taking a walk or deep breathing to symbolize the act of releasing emotions. Key insight, letting go is about creating mental discipline. It allows traders to approach each session as a clean slate. Chapter 32. The Reset, entering the fertile void. The fertile void is described as a transformative mental state where traders can pause, reset, and re-energize. Goldstein argues that burnout and fatigue are common pitfalls in trading, and the fertile void offers a much-needed reprieve. What is the fertile void? It's a space of stillness, free from the pressures of decision-making. Here, traders can reflect, strategize, and reconnect with their purpose. Example: a professional athlete takes an off-season to recover and improve their game. Similarly, traders should build in periods of rest to maintain peak performance. Actionable tip: schedule periodic trading sabbaticals where you step away from the market entirely for a day or week. Use this time for introspection, learning, or simply relaxing. Chapter 33. Self-compassion, soft power. Goldstein describes self-compassion as a form of soft power that fortifies resilience. Self-compassion isn't about going easy on yourself, but about recognizing that setbacks are part of the journey. Key components of self-compassion: mindfulness, acknowledge your struggles without self-criticism. Self-kindness, speak to yourself with encouragement rather than harsh judgment. Perspective, understand that all traders face challenges and mistakes are universal. Example: a trader who misses a major opportunity could berate themselves, or instead see it as a valuable lesson for future trades. Actionable tip: when frustration builds, pause and ask yourself, what would I say to a friend in this situation? Offer yourself the same kindness. Chapter 34. Developing your human potential. In this chapter, Goldstein emphasizes that trading is more than just financial success. It's a platform for personal growth. Every challenge in the market is an opportunity to strengthen your character and skills. Core areas of development: discipline, consistently following a plan, even when it's difficult. Resilience, bouncing back from losses with a stronger mindset. Adaptability, embracing change and uncertainty as growth opportunities. Example: a trader who adapts their strategy after market shifts demonstrates not just trading acumen, but personal growth. Chapter 35. Becoming your best ally. Goldstein urges traders to cultivate a positive and supportive inner dialogue. Your inner voice can be your greatest ally or your harshest critic, depending on how you train it. Key takeaway: replace self-doubt with affirmations of capability. Celebrate small victories to reinforce positive momentum. Actionable tip: create a confidence journal where you document moments of successful decision-making. Reflecting on these can boost morale during tough periods. Chapter 36. That's a wrap. In the final chapter, Goldstein reflects on the journey covered in the book. He reminds readers that trading mastery isn't a destination, but an ongoing process of growth and self-discovery. Goldstein concludes by reminding readers that trading mastery is not a final destination, but an ongoing journey. The mental game of trading challenges you to grow, not just as a trader, but as a person. Final insight: true mastery comes from aligning your trading practices with your values and long-term goals. Key takeaways: preparation and execution are equally important. The production phase sets the foundation, while the performance phase is where you put the plan into action. Letting go of emotional baggage is crucial for staying focused and resilient. Mindfulness, journaling, and post-trade reflection are powerful tools for long-term success. Resilience is the glue that holds everything together. It's not about never falling, it's about always getting back up. That wraps up our deep dive into mastering the mental game of trading. By now, you should have a clear understanding of how to align your mindset, strategy, and execution for trading success. Remember, the market is a marathon, not a sprint. Keep learning, keep growing, and most importantly, keep trading smart. This is Simplified Whispers, and I'll see you next time.